In this video, I would like to try to explain to you why trading with less than $1,000 is a way that you will lose everything. This is just one of the examples. It is not the rule that you will lose everything, which is also possible to make money even with less, even if with $100. But $1,000 is something that is very good to start trading. It is nice to have starting capital on your account balance because it will allow you to easily trade without any pressure on you and also without being exposed to oversizing, overtrading, and all of these terms I will explain in this example. On the right side, you can see that I have a chart currently open with the Euro USD on the 1 minute time frame. On the left side, I have an article written on the getnotrading.com website where I have explained all the possible details about trading Forex with less than $1,000 and why you would lose everything. You will see an example and also one of the ways how to prevent that from happening. So let's start. First of all, here it is, an introduction which I have written for this article, where I explain why it is important and what happens with when you start trading with less than $1,000. So it is not mandatory that you invest $1,000. You can start with $100, but you will need to be patient and really control yourself, not oversizing and not overtrading, because if you have a clean strategy that will give you a precise entry and exit levels, this strategy probably will not be 100% correct. And if you have 90% correct, those 10% can completely wipe your account because of oversizing and overtrading. Now, here it is, one of the examples, one of the situations that can happen during trading, and it is written right here. You invest $100 and you try to double it in a few trades. And that means in a few trades during the day or in a week. And the only way to succeed and earn $100 with $100 trading account is to open lots of trades with smaller lot size, or you will open few trades with larger lot size. And what means large lot size is this one, is this the volume, because this volume represents how much each pip, and that the pip is the price change of the market, it will define how much each pip will be equal to. So for example, if the price changed by from 7101 to 7111, this will be a change by 1 pip, and that means you can make $10 per change. But if the price goes against you, you will lose $10. So you can see how the price changed. It's not very fast currently because the current market is not volatile. The market is currently not under the London session or the New York session. But when the most traders are active, this will mean that this price can fluctuate very quickly. So if you open few trades with a very large lot size where 1 pip is equal to $10, this means that you can wipe your account, which is a $100 account, in 10 pips, which will mean very fast. But if you start trading with a smaller lot size, which means, for example, let's take a 1 micro lot, 0.01, where the 1 pip will be equal to $0.1. This will mean that you will need lots of pips to change in order to make decent amount of money. So it depends what you will do and also what will be your decision. Now, if you lose all what you have, you invest again. And if you double account, you continue doing the same way and eventually you lose all what you have. Same story ends with investing again $100. So eventually you invest $1,000 in 10 times and you lose everything. So when you lose $100 for several times, you stop investing because you do not see the point of losing always. Then you move away from Forex trading because you think it is very hard, it's not easy, it's scam, and you cannot make any money. But that is not very correct because there is also another side. Here it is the topics I will cover here in this example, where the overtrading, oversizing, and also trading without stop loss is one of the most problems you will experience, and also most traders have making these mistakes. Then we will see What is the daily average pip range, why it is important, what is micro lot size, mini lot size, and the standard lot size, and that means this one here, which is the volume, which defines how much one pip will be equal to. And then stop loss and day trading with $1,000. Why it is good to have $1,000 starting account balance, and later on you will see $500 account balance, and they will see the other options. Now, the day trading with $1,000 and perfect setup, you will see that if you have a trading strategy that explains to you when to enter into the trade. For example, if you are watching the trade and you are watching for the pin bar, which will be a perfect signal for you to enter into the market. So you open a new trade with pretty large lot size and you wait for the market to move in your direction. And the market moves into your direction, which makes you very happy. So for example, let's say I open one lot size and I open the trade with sell, which means I'm expecting that the price will go down. So I click sell. It says not enough money because my account balance is not enough. Let's say, for example, less than this one. For example, let's say 0.5 sell. Oh, here it is. I am able to open this trade. So let's see how this moves. Until this moves, you will see, we will wait until the price changes, and after that we'll move further on. But for example, let's continue with here. You open your trade with pretty large lot size, okay, and you wait for the market to move into your direction, and markets move into your direction, which makes you very happy. Well, I'm also happy when I'm making money. So it was easy because you make money, so that's great. And look, after that there is another signal which comes here. And what happens? You open another trade, and that trade is also with large lot size, which means you are increasing, and also you're opening trades with large lot size, which means you are exposed to the market. So if the market turns around, for example here, is not on your side, and you end up losing all what you have invested, because $100 on your trading account is not too much. Now let's see what happens now. Currently I'm in profit for $1, for example. So if the price continues to move in my direction, I will make even more money. So in this example, what happens if I open even more trades, sell, but I'm not able to open because my trading account and the leverage is not very good. So you can see I already have earned $4, which is a pretty nice amount of money. Yeah, that's okay. So I close this one and I accept, okay. And I will close this one. So currently I have earned $4. But remember that currently I have $1,000 account balance because I have started with that. It is not $100. But the idea about this one is that you open several trades with a large lot size, which ends up later on end up losing your money, because if the price goes down, you open sell orders. If the price goes against you, you will easily lose all of what you have. Now, what happens then? You will feel very disappointed, and you are still thinking why the market did not move you in the direction, because there was a pin bar, which is a great setup in this case. What has happened? So what happens then? You learn about the lesson. Maybe you stop trading and then get back in a few days later on by investing again $100 on your trading account. So you repeat the same scenario with the same outcome. So why is this happening? So I will explain. There are two things. What is making this from happening? What is making this happening? And that means overtrading. The overtrading is to open too many trades at the same time or in a very short time period. That means if I open a new order right here, I click sell, okay, and I open another order. Let's open it with a smaller lot size, another order, and I can see that the price is moving into my direction. And after that, if the price goes in my direction, I can see I'm making money, and that's great. And then I decide, okay, if I'm making money, I would like to make even more. So I would like to open even more trades. Yeah, that's good. So if the price goes into my direction, this means I will make lots of money because I have several trades open. But then overtrading has another side, and that another side is, for example, like in this here, where all my trades are against me. They are in loss. So if the price continues to go against me, and that means I have opened all the sell orders, if the price goes against me even more and more, going up and up, This will mean that all my trades will increase the loss of my trading account. So eventually later on, if I keep them open, this means that I will lose all my account balance, which is currently $1,000, for example. This is the overtrading of what happens on the market. So the logic is here, do not open too many trades at the same time or in the short period of time, adding even more and more. If you have a trading strategy which have certain rules, that means, for example, you can only have 1 or 2 trades open with stop loss set to 1% on each trade. This is something that you need to follow. So here it is, what I have written here. The first problem that happens in trading, example, open too much trades in day trading with $1,000. You think more trades will give you more money so you can double your account very fast. This here, what's happening is greed. You are greedy to make even more money when the price goes into your direction, or there is thinking that the market will move in your direction and you will make money. This can happen. The market can move in your direction and you can make lots of money with overtrading. But on the long run, it will happen when the market turns around you and you will lose all what you have. The way of thinking is logical and makes sense. Of course, if you open more trades and they are all winning, then you will make more money compared to opening only one trade, which is also logic. What is the problem? In the example is the approach of trading. There were no stop loss levels set on each trade and you can wipe your account with day trading with $1,000. Now you have seen that I have opened several orders. There were 3 orders here, but there were no stop losses. Take a look here. All the trades that were open, there were no stop losses. So if the price goes against me, like in this case here, I would have opened all orders until the price gets calls margin call, which means the broker closes all the trades I have opened because I do not have enough money to sustain this loss. So I end up losing all my money on my trading account. The second thing is oversizing, and that means oversizing when you open new order. For example, I open a sell order right here, then I wait for the price to move into my direction, then I open a second one but with a slightly larger lot size, and that means oversizing. And then you can see in this example, opening the trades with large lot size. You think that the large lot size will give you fast results to reach your goal, which means doubling your account, because you have started with a small account balance. So if you open more trades, but if you open more trades with a larger lot size each time, this will mean that each trade and with a larger lot size will make you more money. And that's correct, because that way of thinking is logical and makes sense. If you open a trade with a large lot size, each pip will be equal, it will be equal more money. And if the trade is winning, you will double your account very quickly. What was the problem? The example is again the approach. There were no stop loss here. So I did not put here any stop loss, and I haven't opened too many trades with the 2 large lot sizes. I have increased these lot sizes on each trade. You can see that here the size. So what happens? When the price moves against you, your trade acted like your enemy. The large lot size have speed up losing or losing your money, because what's happened? This small trade here, it has currently the profit $0. This one here, it has a $0.02 of loss, and this one here doesn't have also, it has a $0. But for example, take a look here. When the price goes in your way, 0.16 against 0.04 is the difference by 4 times. And that means when the price goes in your way, that's good. But if the price goes against you, this one will increase the loss on your trading account 4 times faster than the first trade you have opened. This is something that can happen. And only and at the end, what happens if the price goes against you? All trades will increase the loss, especially these one, which are the biggest one, will increase that. So you will lose your money very quickly. Now the stop loss, how to solve the 2 problems, you do not lose your initial investment. First of all is stop loss is the key, which means each trade you open here should have a stop loss, and the stop loss should be equal by some percentage of your trading account. For example, if you are trading this one of $1,000, this trade should have stop loss equal to 1% of your trading account balance. On $1,000, this will mean a $10. So if you lose on this trade, this means you will lose only it will be not 1%, it will be $10, which means on these 3 trades, each trade should have a stop loss $10. So if you lose all 3, with different lot sizes here, you will lose $30, which is also acceptable on $1,000 with the 3 trades. So this will be one of the ways how to prevent that. Now, the common question is, how does it really work? How stop loss level will help you not lose your $1,000? And what should you do to prevent losing again? This means when you open the trade, you can set level, which defines how much money you accept to lose, and that means stop loss, which will be defined by the number of pips and the lot size. And if you lose $1,000 of 1% of $1,000, which is $10 on each trade. So percentage can be 1% or any other, which should be defined by your trading strategy. What you have defined how much each trade should be acceptable loss. So you do not, when you put a stop loss on that trade, you do not need to wait and watch all your trades, because you can move away from your trading platform and you can do something else until the markets reaches your take profit or stop loss level. Now, here it is, stop loss helps. You see how stop loss can help you prevent losing. And that means preventing the loss, not accepting very large loss, but to cut the losses if the price goes against you. Now, the most important thing in trading is to prevent losing your account balance, because if you lose all $1,000, you will need to invest again to start trading, which is not very easy. So it is always mandatory to prevent losing your account in a few trades. So why do you lose all $100 or $500 or $1,000? It will be an example here because it will clearly show you what's happening. I have written here in the article an example. Let's start with this scenario. When you start trading with $1,000 on your trading account, you start looking for trading signal. And for example, these are the signal. I have opened this trade at this moment, and you can see I have opened sell orders. Next step, to define the trade without stop loss. The trade is opened with a large loss because you want to earn money fast. The lot size defines how much money each pip will be equal to. So to calculate in this Euro USD, for example, I have opened, let's close all these ones. I will open a new one, which will be 0.5. And 0.5, we can see that here we do not have, but we can multiply by 5 this one, which means pip value will be equal to $5, because 5 times 0.1, 0.5, you can see it here, will be equal to 5 multiplied with $1. So I will click sell. So whenever I have 1 pip, I will have here $5. Now, there are different lot sizes, which is micro, mini, or standard lot sizes. I have opened half of standard lot size or 5 mini lot sizes. Then here we have to completely wipe out your money from trading account. You need 10 pips on standard account, 100 pips on mini account, and 1000 pips on micro account. So if I have started with $100 on my trading account, I will need only 10 pips with one standard lot, which will be here, which means 10 pips multiplied with $10 will be equal to $100. Only 10 pips. And 10 pips on a market is very easy. Why? Because you can see here what is the daily average pip range for the Euro USD. So for example, today is Wednesday. On a Wednesday, I can see that on, let me increase this one so you can see much more clearly. We can see that on Wednesday, I have on average, which is during the London and New York trading session, is 60 pips. So during this session, during the day, in a day, the market moves around 60 pips. This means 6 times more than I need to wipe completely my trading account, which is pretty fast. So you can see what's happening. And during the day, we can see when the market starts at 9 o'clock, we can see it is already 20 pips on average movement on the USD. So if I start trading at 9 o'clock, 10 pips I can lose immediately in less than 1 hour. In 1 hour, 20 pips the market move in my way or against me. So 10 pips can be easily and wipe my trading account. So it is important to define what lot size you will use. In this one example, you will lose on the micro lot size. You can see with 1000 pips, you will lose $100. On the mini lot size, with same number of pips, you will lose, just a minute, each pip is $1, okay. yeah, it is the same amount, but the number of pips is less. So in this case, with micro lot size, I have 1000 pips multiplied with $0.1, which is 1 pip equal to, I lose $100. In this case, when I have standard lot size, to lose $100, I only need 10 pips. Now, what happens? A few dozen of pips destroy your account balance and you end up depositing more money on your trading account, and you repeat the same process all the time. With the overtrading, if you open micro lot size, you can see that you're not earning enough. And each pip is equal to $0.1, which means you need 100 pips just to earn $10, which is not very easy, because 100 pips on Euro USD, which have average movement of 60 pips during the day, you will need several days to move in your direction to earn that money. So if you want to double your account, you need 1000 pips, which will mean you need days and days with each trade profitable. Now, problem appears when 10 trades you have opened become losing trade. Your loss is increased by each pip move against you. At the end, you end up with no money. You see, open too much trades with a smaller lot size or trade with larger lot size, it will make you lose your money very quickly. Now, stop loss in day trading with $1000. If you define certain percentage, you will lose only that amount of money. So if you define 1%, you can see that here, that means with the standard lot, which will be equal to 1.0, you will lose $10 per each, $10 pen per pip. So imagine you start losing 10 trades in a row. That would give you 10% of your starting capital. If your starting capital is $1000, you will lose $100, which is acceptable, okay? Because if you have trading strategy which will be successful, if it has 50% of success ratio, this means of 10 trades, probably you will have 5 trades profitable. But if you have 20 trades, 10% of them will be profitable and 10 trades will be lost. Now, you can see that here, if you have 5% on each trade, you will lose 50% if you lose 10 trades in a row. So $50 on a trade account is pretty small and hard to recover without risking too much on each trade. The solution is to open trade with a smaller lot size and to plan to lose 1% if the trade is losing one. Now, it will take a lot of time to earn decent money if you start trading with $1000. Even though you see that you have the plan to make money, it happens that you lose all the money. Desire to double the account forces you not to follow the trading plan. Now, what the problem is here is the greed. You're looking for easy money very quickly, which is at the end not very good, the solution in trading. The greed and the fear are one of the most important emotions in trading, which will eventually bring your account balance to zero. So you need to prevent that from happening. Now, here it is, a micro lot size with a $500. Then you have a day trading with $1000 account balance. You can also read all the details here. I will not go through each of these, but you have understood the logic and also the idea. But here it is, the conclusion. To solve this problem and to be in 1% of your account balance, you need to do day trading with $1000 on your trading account. If you lose 100 pips, which will be equal to $10, that will be 1% of your account balance. This way you are leaving enough space for the price to fluctuate on a daily basis and you're still inside 1% of acceptable stop loss. So start trading with a small amount of money will eventually bring your greed on, and that means wiping your account very quickly. Overtrading, oversizing will lead to that, so it is important to prevent fear and greed, especially greed, to enter into the market when you start trading, because doubling the $100 in a day or a few days is not a very good idea. And starting with a larger amount of money as account balance, for example $1000, will prevent from greed from coming into your trading experience, because making money 1% or 2% per day or in a day with several trades will bring you $100 easily if you have profitable strategy. So later on, if you increase $1000 to $10,000, you can easily increase also your stop loss of 1%, which will be equal to $100 instead of $10, which will bring you several $100 of profit if you have 2, 3, 4, 5% of your target per trade, which will eventually bring enough money on your trading account. You need to be patient. That is the most important thing. Not to be greedy is also very important. So this is all for this. You can see what is very important in trading. to trade with less $1,000 and why it is important and what happens if you trade with less of money. The greed is always present in trading, which should not be involved in trading. Try to avoid being greedy. Here it is again, the article. If you would like, I will leave the link below in the description so you can also check whenever you want. Here are some of the examples, what happens in any of the cases, so you can learn more and test your with the demo account. If you have any questions, feel free to leave a comment. If you like this video, click the like button and subscribe. Share with other traders if you think it will be useful. See you next time and happy trading.